Hi everyone, I'm Debbie Roberts, owner and financial advisor at Property Apprentice. Join us today for the Week in Review, where I talk about current events for the everyday investor and home buyer. Our topics for this week: topic number 1 from Good Returns on the 17th of September, why some mortgage advisors say splitting is good when interest rates are low. Topic number 2 from Stuff on the 16th of September, spring house hunting season is here. Everything you need to get your home ready to sell. Topic number 3 from New Zealand Advisor on the 16th of September, Otago tops the rental market with record weekly rent. Fourth topic for this week in review from the Mortgage Mag on the 18th of September, predictions for big OCR drop next month. And topic number 5 from New Zealand Advisor on the 17th of September, new research reveals quake-driven flooding risks for New Zealand homes. And as always, the links to these articles are in the show notes below. So first up from this week in review from Good Returns on the 17th of September, why some mortgage advisors say splitting is good when interest rates are low. While the Reserve Bank's expected to continue cutting the official cash rate, a common question for mortgage advisors right now is whether to float or fix a mortgage rate. This is because interest rates have fallen by 2.5% over the past year. And with about $135 billion in fixed mortgage debt due to be rolled over in the next 6 months, many borrowers are worried about missing out on better deals. However, mortgage advisor Campbell Hastie argues that borrowers should not be making an either-or decision. He points out that historical data shows interest rates under 5% are a rarity and don't last long, suggesting that current rates are already attractive. He says that borrowers who've grown accustomed to rates falling need to look at the bigger picture and decide if they want to take advantage of the favourable rates available now instead of gambling on something that may not come. Instead of a blanket recommendation, Hastie advises a strategic approach, such as splitting the mortgage. He recalls a client with a large mortgage who was faced with a substantial increase in repayments all at once. Had he split his mortgage earlier, he could have staggered the financial impact. Hastie believes a split mortgage is a sensible middle ground approach that gives borrowers flexibility. Another mortgage advisor, Manshul Krishna, agrees that splitting a mortgage can be a valuable solution. It allows borrowers to take advantage of different interest rate terms and tailor their mortgage to their financial goals. However, he warns that a drawback is that it can make refinancing more challenging, as there may be additional costs associated with each part of the mortgage, like break fees, for example. And also, if you refinance to another lender within a 2 to 3 year timeframe, then there can be clawbacks on any cashback deals that have been received. While he notes that negotiating a better deal can be easier when the bank perceives a borrower is at a higher risk of leaving, there may still be break fees if a borrower restructures their loan while rates are falling. So, look, I think it is absolutely on a case-by-case basis. There is strong expectations that the official cash rate will drop further over the next few months leading up to Christmas. So there's a pretty good chance that rates will continue to decrease, potentially significantly. But if you've got a mortgage advisor, it's a good time to be talking to them because you might just be able to refinance to another bank, sort out all of your lending at the same time, get a cashback deal and restructure your loans all in one fell swoop, if that works for you. Second topic from this week in review from Stuff on the 16th of September, spring house hunting season is here. Everything you need to get your home ready to sell. When you're ready to sell your home, it's about much more than just a listing. It's about appealing to a buyer's emotions and telling them a story about what their new life could be like. With spring here, now's the perfect time to get your property ready. So where do you start? Well, just like a good novel, your home needs a compelling beginning. The first chapter is all about curb appeal. The first thing that buyers look at, how your home looks from the street. This means taking care of the simple things, tidy up the entrance, trim the grass, fix any obvious issues like peeling paint. Adding a fresh welcome mat or a potted plant can make a huge difference. After that, it's time to go inside. The first 2 big steps are to declutter and deep clean. This means packing away personal items like photos and knickknacks to give the space a blank slate. Then give the entire home a serious clean, from polished baseboards to spotless bathrooms. Once it's sparkling, you want to repair and replace any small issues you find. Things like chipped paint or loose cupboard doors can suggest neglect to a buyer. It's also a good time to consider bigger jobs, like putting a fresh coat of paint on the walls. Choosing a neutral colour helps buyers visualise the home with their own belongings. To complete the story, you need to decorate to impress. This is about creating a sense of balance and flow. You don't want too much furniture as it can make a room feel small. You can also add some small luxuries like fresh flowers or a scented candle. These little touches tell a buyer that the home is loved and enjoyed, and just maybe they could love and enjoy it too. Finally, before you go live, ask friends and even a real estate agent for feedback. This will give you confidence that your home is ready to hit the market. My advice would be, if you're thinking about selling a home, then before you spend money upgrading it, talk to a real estate agent in the area just to double check whether it is actually going to make a difference to the sale price. Certainly, renovating is a way of attracting some more potential interest in the property. But in other markets, it could be the opposite. There could be people that are looking for opportunities to add value themselves. So before you spend money, make sure you're going to get the bang for your buck. Topic number 3 from New Zealand Advisor on the 16th of September, Otago tops the rental market with record weekly rent. According to recent data from Trade Me Property, the national rental market has remained stable during the winter season, with the median weekly rent holding steady at $620 for the third consecutive month. However, there is significant regional variation, with some areas experiencing a softening market, while others are seeing record high prices. The Otago region has now become the most expensive place to rent in the country, with its median weekly rent climbing to a record $685 in August. This figure's up 5.4% from the previous year and a significant jump from July. Trade Me Property spokesperson Casey Wild attributes this sharp increase to 2 areas: Dunedin, where the median rent rose to $650 per week, and the already high prices in the Queenstown Lakes district, with an average of $800 per week. Wild noted that demand for properties in both areas remains strong. While Otago's market is heating up, other major regions are seeing a different trend. Wellington continues to soften, with its median weekly rent falling to $595, which is down 8.5% year on year. Auckland also saw relief for tenants, with the city's median rent at $660. That's a 2.2% decrease from the same time last year. Within these markets, rental prices vary significantly by property size and from suburb to suburb. In Wellington, for example, the median rent for homes with 5 or more bedrooms increased by nearly 19% to $1,100 a week, while smaller homes with 1 to 4 bedrooms saw rents drop. If you'd like to learn more about investing in property, join me at one of our free events called How to Succeed with Property Investing. I discuss strategies for successful investing from my perspective as an experienced investor and a financial advisor, and all of our free events are available live and online. Check out propertyapprentice.co.nz for upcoming dates and register today. We don't sell property, so it's all about increasing your knowledge to reduce your risk. If you've already been to one of our free events and you'd like to find out more about how we can help you to reach your financial goals, you can also book a no-obligation phone call or meeting with my husband, Paul Roberts, via the website. That's propertyapprentice.co.nz. Fourth topic for this week in review from the Mortgage Mag on the 18th of September, predictions for big OCR drop next month. Westpac and Kiwibank are both forecasting a 0.5% cut to the OCR next month, after New Zealand's economy shrank by a significant 0.9% in the June quarter. This economic contraction was more severe than the 0.3% that most forecasters expected, and effectively erased all economic gains made since the beginning of the year. The weakness was widespread, with a decline in output across 10 of the 16 measured industries. Kiwibank's chief economist Jared Kerr stated that the Reserve Bank of New Zealand is now playing catch-up to the deteriorating economy and should act decisively by cutting the OCR to 2.5% as soon as possible. Westpac is also going further with its forecast, predicting an additional 0.25% cut in November, which would bring the OCR down to a stimulatory 2.25%. Westpac's chief economist, Kelly Eckold, noted that the surprisingly weak GDP data makes the case for accelerated easing look strong. And this could lead to the Reserve Bank's Monetary Policy Committee to agree on a larger cut, especially given that 2 of its 4 members had already argued for a 0.5% cut at their last meeting. Westpac believes that this rate reduction could move the OCR into stimulatory territory, with implications for the 2026 economic outlook. However, Eckold also cautioned that indicators could change quickly and the bank will not be making any fast judgments on future growth. Westpac's current forecast is for the OCR to begin increasing after next year's general election. My thoughts on this is that it is well overdue for the Reserve Bank to take some decisive action to help stimulate the economy, so dropping it by 0.5% in October and then potentially another 0.25 in November, I think would make sense. They don't have to make the decision all in one fell swoop, they can stagger it before they take a 2-month break over Christmas. Topic number 5 from New Zealand Advisor on the 17th of September. New research reveals quake-driven flooding risks for New Zealand homes. New research is revealing how earthquakes can create new flood risks by altering rivers and damaging flood defences, a hazard that mortgage advisors and planners can't afford to ignore. A University of Canterbury student has developed the world's first database on how earthquakes have affected rivers, hoping to help New Zealand better prepare for future disasters. The research shows that over 3,700 rivers in New Zealand, including more than 450 large ones, are at risk from this type of damage. Earthquakes can cause rivers to shift, flood, or become blocked, creating new lakes and floodplains. A clear example is the 1987 Edgecombe earthquake, which damaged stop banks and caused land to drop, leading to major floods in the years that followed, including a significant event in 2017 that forced thousands to evacuate. Subsequent quakes in Christchurch and Kaikoura also changed how water moved across the land, redrawing flood maps and putting new areas at risk. The researcher built her model by studying 52 earthquakes globally and combining that data with New Zealand's fault maps to create future scenarios. She stated that while we can't prevent earthquakes or floods, we can help people be ready for them by using her research to plan more earthquake-resilient flood mitigation. The research highlights how natural hazards can change a property's risk profile instantaneously. Homes and developments near rivers or flood-prone land face increased long-term risk after a major earthquake, which has implications for insurance, property values, and loan security. The findings could help identify safer locations for future construction and assist councils and planners in making smarter decisions to protect their communities. We've talked about a shrinking economy, volatile property markets where one region's booming while another's slumping, and ongoing questions about how interest rate cuts will really impact your mortgage. It's an unpredictable time, and making a smart property decision has never felt more challenging to some people. But you don't have to negotiate this uncertainty alone. We're inviting you to join our free event called How to Succeed with Property Investing, where you'll get clarity and guidance to help you move forward. These events are all available online, so you get valuable insights and strategies tailored to today's market conditions, regardless of where you live. Look, whether you're an experienced investor or just getting started, this free session will equip you with key tools and insights to help you make confident, informed decisions. Register today and take the next step towards achieving your financial success. In our free event, I'll also tell you more about how we can help you as a client to achieve your investing goals. So if you're interested in finding out more about how we can help you, go to propertyapprentice.co.nz today and register for one of those free events. If you've already been to one and you want to know more about how we can help you on your journey, book a no-obligation phone call or meeting with my husband, Paul Roberts, through our website. That's propertyapprentice.co.nz. Thanks for listening. Hey there, want to stay on top of the latest property news and trends? Subscribe to the Property Apprentice podcast for weekly updates that will help you to navigate the market like a pro. We cover everything from insider tips to expert interviews, so you'll always be in the know. And don't forget to ring the bell and hit that subscribe button here on our YouTube channel for even more helpful content to boost your property journey. Check out the link in the description to subscribe to the podcast, and we'll see you in the next episode. Happy investing.